Hi, Warriors. How's everyone doing today? I didn't have enough time to stream it myself, so the other stream, like I need a
We
few
should
more
be
minutes.
going now.
I know, but I can't leave the page to go ahead and do it.
Oh, do you know how to do it?
No, I mean, so I could also stream it
Yeah,
and
yeah,
announce it
absolutely.
again. No, I mean, not so I could stream it, so I could go on to X and
Oh,
retweet the live.
oh, got
That's
it,
how
got
we,
it.
yeah, so I usually need a little bit more, like a couple minutes. Anyway,
Sorry,
I'll do
dude.
it tomorrow. It's okay. How's everyone doing today? Steve, AJ, Ingmar, Greek holiday. They're always on holiday, those guys. Let's see. Hi, Ryan,
Terrible,
John,
isn't it?
Cayman,
They're always on holiday, that
Cayman.
lot.
Yeah, Ben. Ben's here for an interview with us today. Will, how are you? Linda, how are you? Everyone, how are you? So let's take a look around. Is Grega here too? Let's see. Okay, so taking a look, that action yesterday in the S&Ps blew out a lot of divergences. I was going to start here with you, Ryan. Well, I think we've done it. So is this a breakout? Do you go with it here in Europound?
I think we could well have a breakout, my friend. It
Okay.
needs to hold this, call it 50, 55, those prior tops. If it holds that, then it's looking good. It started holding the 87.20 level, which was that sticky point that we had for the last week or so. Yeah, I think I was getting a bit worried that perhaps the market had traded as much as it wanted to price all the budget stuff, but some headlines out overnight and this morning seem to have done a bit more damage. So it doesn't look like we've fully traded or priced the budget yet. So hopefully, touch wood, a couple more weeks of this to go.
Okay. The pound and the euro look a lot different. So we're over this 1650, but it's not like it's acting like any great breakout. We got what, about 20 pips above that
Yeah,
or so,
it's
and
trying
we're
to
right
hold.
here. Yeah.
Just trying, giving it a go.
Okay. So you like it? You would try it here?
I'm already in euro sterling. I think that's about as much euro as I want at the moment.
Okay.
But technically, yeah. I mean, if it holds here, the thing I don't like about euro dollar at the moment, we've just seen vols, the 1 month ATMs dropping below 5.5%.
Wow, they're still
Um,
going lower. Yeah.
yeah, and that's see if you're trading things like that, you want to trade those levels, you've got to be pretty tight and take the money when it's there.
Yeah. It's like a 30 pip winner is a big deal in
Yeah,
euro now.
yeah.
All right, all right. So this is looking a little bit elongated for a flag, but still hasn't done anything wrong. Uh, you think we're about to penetrate this and go, or
I,
a lot of either ors out there, aren't
Yeah,
there?
I thought this one might be going to the downside yesterday. I've got my line there 39, 39. What is it? 78, and we were getting under there, but it wasn't really moving. And then we got back above, and then we're holding it around the 80s. But we can't get above 140 and hold it. If we can't do that, we certainly can't get above 40, 20, 30 and hold that either. So yeah, like exactly like you said, this is a coin toss at the moment.
Okay, there was some news that they're going to extend talks with Scheinbaum. Doesn't still looks like a mess. U.S. dollar, a U.S. dollar mess, not mex.
US dollar mex, yeah, I like
Yeah,
it. I like it.
what you
We're,
just have
we're
to range trade it.
we're in the box. We're in the
Yeah,
box. 1820, 1850, and we got this middle of the road level at 1835. So yeah, trade the edges. I still feel like if one side is going to break, it's going to be the upside. We've loosen the top of the casket, if you like, with those prior moves above 1850. But we're not really looking like we want to have a dip down. So I would potentially play along off that 1820s. depending on why we're going there. But this is just, you can't do anything here. 1835, 1845.
Okay, well, before I go over to Kman, everybody, it's Ryan's birthday. You know what that means, right?
Yeah, another year closer
Happy
to the grave.
birthday to you. Happy birthday to you. Happy birthday, dear Ryan. Make a million pips this year. Happy birthday, buddy.
Thank you very much, mate. Thank you very much,
And
everybody.
and I don't mean on micros, I mean on the bigs, a million pips. All right. All right. So I'd like to thanks Ryan.
Yes,
I know
mate.
that K has is running shorts in US dollar one, and
Mm,
it still looks ugly. K, you're still riding it?
yeah, I still do. Good morning, by the way.
Good
Good morning,
morning.
Dale.
Yeah.
Morning,
How
everybody.
are you?
Yeah, I'm still running a bit short. I actually just snipped a little off, below 710, just ahead of that meeting. We will have Trump and G meeting on Thursday. I think afterwards we may find some fresh impetus to pick one or the other side. It's quite kind of funny that PBOC lets dollar China come down, and at the same time saying that they're going to keep ample liquidity and loose monetary policy. But I think the market is actually investing a bit in China again. Read some reports about at least Asian investments into China, which was one of the reasons why I went into this trade. The other one that it didn't go higher despite the first of all, I mean, for quite a while, we didn't see China or US making any progress, yet it wouldn't break back above 715 significantly. So yeah, that's why I'm keeping it running. I still think that
Sure, it looks like
if
it wants these lows, bro.
I'm
It's
sorry.
708. Looks like they want these lows here.
Yeah, but I mean, if there would be a winner in this meeting, I'm just thinking it's not going to be the US. I don't think China will give a lot unless we get real deals. As I was saying already a couple of times, more than just TikTok and soybeans versus tariffs. They need to do something on the rare earths.
Right.
Yeah, I mean, Trump
Yeah,
is
that's a big
Trump is
one.
hoping that they can find a deal, but I'm not sure that China will go that far. I mean, if he wants to get access to, or if he wants them to give him full access on rare earths, he's going to have to scramble back on Taiwan, and I don't see that happen. So
Okay. That's
yeah, I think
interesting
maybe a little
because
lower up.
that's interesting because the market right now, after yesterday's update,
Yeah.
is putting a lot of faith in the word framework, extrapolating it that everyone's going to get what they want or have agreed to everything. And what you're
Yeah.
saying is it's possible that even though they have a framework, the big kahuna, the rare earth minerals, may not be part of the deal.
Well, I mean, that's always the risk, right?
Yeah,
It took so long. I'm not saying the Chinese officials, because they have had work groups for many months, but it took so long for Xi to even come to the table. Let's put it that way. And he's actually never not even been out himself on that meeting. It's all being arranged by other people, and then Trump saying that they will have a meeting. I'm,
I
I'm,
know.
I wouldn't put my hopes too high for that meeting.
I agree with you. I think the market is, but I'm not so sure.
Hmm.
I did want to ask you about, is this just people little profit taking before the
Yeah.
BOJ in US dollar yen? So,
Yeah, there's several things ongoing. So I mean, I think there's a bit of well, first of all, technically, we've banged our head against that 153 and a quarter.
yeah,
That's one thing. Then bit of positives on Trump and Takaichi being buddy buddy. Trump even did a Roy Orbison on Takaichi, saying that she can get all you want. So I think a bit of positives there. Yeah, yen has been doing better. There's maybe even a bit of sterling yen selling in there. And then, oh, we had one
Yeah.
of your best US banks calling for dollar yen down to 100 in the next decade. So I don't know if people are paying much attention to it. But
Wow.
this is a bit of a healthy
Yeah.
correction, I would say.
Yeah.
People trying to read the Besant Katayama meeting regarding FX, but we have a different sound from the US than we get from Japan. Japan is not really hasn't really said much about the discussion around FX with between Besant and Takayama. But we had one of the other ministers, and that's where I'm thinking that this higher yen is only temporary. He repeated what he said like a week or a couple of weeks back that they will fight the weak yen by more economic stimulus. And that is actually, to me, that's actually a green light to sell more yen
Yeah.
when we only listen to that line.
Okay. Any commentary on the gold, silver here?
Yeah, it's what I said on my update. People are getting out of their positions, and I would even say short term is already short. Trying to push it lower into that meeting, Trump Xi meeting. But I think time and the result of the meeting will tell us that will be could be at least the next big driver for gold. Yeah, silver came into support. That's holding right now around this 45 and a half. And gold
Yeah.
also came into an interesting zone for me, at least anywhere between 38.90 and 38 and a half. Could be enough for this round, and then we wait for the meeting and see what comes out of it.
Okay. I still think there's going to be a rally back towards 4,200. I'm
Well,
just
I
not
mean,
sure from what point
if
that it
yeah,
gets going.
exactly. Where do you go into the meeting on Thursday? But if
Yeah.
we only get what I think we may get, and then I agree with you, and we're back at 4,200 in a flash, I think.
Yields,
Nothing.
nothing. Kind of looks like it wants to keep going down. Um, there's a
I, I,
longer end TLT.
yeah.
There's a
Yeah. Some, I mean, for as long as the shutdown goes on, you could lose 1 BP a day, and then the ones that are closest to FOMC interest rate decisions like the twos, they're
yeah.
already there. Yeah, I don't.
I
I'm
got I heard a big event for the shutdown is if it's not open by Monday, a lot of Americans depend on this
mm,
SNAP program, which is what helps them put groceries on the table.
yeah.
And those benefits won't be there on Monday, the beginning of the month. So, as it grinds on, it starts to affect more and more people. So we'll see if that pushes anything. Who knows?
That
Maybe we're just going to stay shut down forever.
that should be a question to be asked Powell tomorrow on the FOMC. I mean, what are you guys going to do if by Monday or Tuesday the shutdown is still ongoing? Are you going to step in and give more liquidity?
Huh. So the Fed could finance it.
Well, I mean, if it's far too early to tell, but because that repo market is so vast, but if you get more and more people pulling money, and then you get additional issues starting next week, as you say, they may as well just get ready,
Yeah.
to roll up the
Start
sleeves
QE.
and get to work.
Yeah. Start QE again for a
Well, I
different
mean,
reason.
they are going to say it's only a temporary measure. It's not QE. They are going to find another fancy four-letter word. I don't know.
Yeah.
I haven't thought about
Okay.
one yet. We should
All
talk
right.
about it tomorrow.
All right. Okay. Anything else top of mind that I didn't get to that I didn't
Ah,
ask you about? How
no,
about Euro yen coming off with all the crosses? And your instincts were right. The guppy was the best yen cross short.
mm,
You know,
Yeah,
Aussie yen was not no trip to Hollywood. This was a little gave you a little bit more. This was
yeah.
really, this looks like it's damaged.
Yeah, I
Um,
think it is. I think it is. This is for sure one I'm not going to hold. I still hold a little bit of euro yen, but this is for sure one I'm not going to hold the sterling yen. By the way, we have Australian CPI coming out in about what is it, 12, 13 hours from now. So that should get your Aussie moving, especially because Bullock, RBA's governor, has been talking about it yesterday or the day before. So I think the market will have their eyes glued to the CPI coming out very soon in Australia. So that's going to
mhm.
be could be decisive for the next percent or so on the Aussie.
Yeah, is your bias to go with the gap that you look for a place to get long for continuation,
I might
or are we into some important resistance that it might be a decent short with a tight stop?
well, I'm actually a little long
Okay,
from 65 to figure the other day. And but I've put my stop in profit now in the money
okay,
just below that 65.20 in case there would be an accident on the CPI.
okay. All right, let's go to the boss. Lake, how are you today? Maybe he's busy. I hear on the
Well,
third
it's
there'll be
Ryan's
mass
birthday, so
looting.
how could it be a bad day? It's Ryan's
Yeah.
birthday.
How,
That's right,
how
right?
old? Yeah, yeah.
I think Ryan's
Ron,
got me by a year, Ryan.
What,
uh,
43?
Yeah, no, I was thinking 37, but yeah. All right, did you turn
you're
53 this year or 54?
3.
I'm so much older than you. Uh,
the
just kidding.
50, the 50s are great. The 60s aren't as great. Enjoy the 50s.
We're gonna, I keep telling, yeah, I keep telling people that about every decade earlier. That's
Yeah.
great. I'm gonna run with that one, Dale. So gold, this is the chart that really has my attention. We're nearing the end of
Month.
the month,
Yeah.
and that's an ugly candle,
Month.
obviously.
Yeah.
So that's an ugly reversal setting up. And obviously we still have a couple of days to go. And I'm not sure how this candle is going to pan out, but it's not pretty. Let's just put it that way. And a lot of people are, just obviously have their attention on gold. And let's just, keep in mind that we just traded below, the October 9th lows. We're now creating lower lows on a daily and weekly basis. And this is your classic throwover, Dale. I mean, how do you feel about this chart now?
I think that we're getting close to ending this first part of the decline, and then there's going to be some kind of reaction, and then we go down for a while longer. Choppy decline, not a crash.
Yeah.
But after I don't think we're going to get to 3,500 on this decline. I think there'll be a rally to sell into first. Uh,
My analysis to the Forex Analytics traders on both the morning edge and the daily roundup yesterday was something like this, and it actually we've seen the song and dance so many times, Dale,
yeah,
that
yeah.
your analysis is very similar to mine. I'm like, yeah, we're probably gonna do this, this, and then finally, base or something before we get some sort of consolidation down here eventually. But it's not going to be pretty and it's not going to be fast. It's just going to be more kind of, ugly. I mean, but it's been such a big move that, and it's been so lopsided. And we also have to imagine that stocks are at all-time highs right now, and gold has been moving in tandem with risk up until about a week and a half ago. So, if stock's correct, I would assume if it's for the right, I say right reasons, never be for the right reasons, but if it's not a if it's just a correction because of overbought or maybe earnings or something, it gold will probably still move in line with risk as well. So that'd be my initial thoughts. But we are going into month end. We got some. If you guys are in the Forex Analytics community, if you go to the news and research room, Benedict just posted some end of month bank information there, so you guys can find it in the news and research room of our community. And some of the estimates. I mean, we have some dollar selling coming in, but we're also, correct me if I'm wrong, Kman, we're at corporate month end is today.
Tomorrow.
Oh, it is tomorrow. Okay, it's 2 days for. Sorry, I was thinking today is Wednesday. So yeah, tomorrow. So thank you very much. So we should have some potentially some dollar buying coming in over the course of the next 24 hours. So there's going to be a lot of volatility from flow. And one of the things that really caught me off guard was last night was the yen. I actually had we had our nephews over, and my nephew just got engaged, so had his soon to be wife over, and we had him over for dinner. And then I looked at the markets, and the dollar yen had absolutely just taken a 100 pip nosedive. And I think Donald Trump got another set of golf clubs, if I'm not mistaken. So, yeah, I saw that. I made it to the 15th inning, Dale, last night of
Oh, yeah, I
game
kept
three.
dozing off.
I couldn't make it any further. I actually had to kick the kids out and go to bed because I was like, I'm going to get less than 5 hours of sleep tonight. But when I looked at my computer just before they left, and before the game three was over, we had sold off quite aggressively. I think the dollar yen should find some support somewhere down here moving forward. But man, that's been a pretty decent decline. And I know a lot of people are going to be looking at it as a double top. It probably needs to be looked at more as a wedge. So we might see maybe a further correction here, maybe another 50 pips or so before we find some buyers. And I think we might be developing more of a wedge than anything in the end. So correct me if I'm wrong, Ryan. I'll ask you: is there any reason to be a yen buyer at this point in time? Do you still see any significant reasons out there?
No, not at the moment. Maybe if the Bank of Japan offers up something, if they don't hike this meeting, they may give a little hint at how far along the path they are towards a hike. Keep an eye on the votes as well, just in case we get another hawk joining the other two who voted for a hike last time. But we're talking piecemeal stuff here. I don't think it changes the overall picture for the yen at the moment.
Okay, all right. Kman, you have any thoughts on and any reason to be buying yen right now, other than maybe some BOJ stuff?
No,
Okay.
still not. No, unless you are an avid follower of Goldman Sachs and you sell dollar yen here for 100 in 10 years.
All right. All right. So no reason to be a yen buyer as of yet. And we'll see how the BOJ pans out in just a couple of days. One of the other things that kind of has my attention this morning is you got risk at highs, and you got the dollar Mexican peso actually showing some signs of life, which tends to happen during risk aversion, because
Yeah.
I know there was some news yesterday about the trade talks
Extension.
being postponed 3 weeks.
Yeah,
Was it 3
like
months?
an extension. Yeah, weeks, I
Yeah,
think.
yeah, an extension. And which the initial response when that headline came out is the peso actually strengthened a little bit. This is yesterday. Yeah, the 1 hour chart. So you saw it like the peso strengthen a little bit. We pushed back towards those lows, and yet we're reversing today, and I'm not sure why. Ryan, has there been anything that I've missed? Now that we did this whole time change thing, I'm a little slow to getting caught up with everything in the mornings. But is there any reason for this peso weakness that you're seeing?
No, not really. I mean, we had that little move yesterday. They got Shine Bond was saying they got 54 pending trade barriers they need to deal with, and it's going to take a few more weeks. But no, we're sitting in this tight 1835, 1845 range at the moment, which is in the tighter 1850, 1820 range. So no, this is waiting for a catalyst. So either trade the edges or leave it in the middle.
Yeah, and I've been with you guys kind of queuing into what you and Kman have been talking about. I've been very reluctant to buy the dollar Mexican peso, even though we're near that long-term 618 retracement. Obviously, I mean, I think a few of us bought dollar Mex when it was at 1822 a few weeks ago. But the fact of the matter is we haven't been able to muster any type of rally. Yes, I know that stocks are at all-time highs, and that might be part of it. But even with stocks moving to all-time highs over the last couple of weeks, I'm surprised the dollar Mexican peso hasn't broken down yet. So now I'm kind of looking at the dollar Mexican peso thinking, do we buy it here with stops below, like, let's say 1810? So stops being, somewhere down here. So your risk. I mean, your risk is very manageable. I mean, if you're long here and you're risking here and you're looking for, let's say, a move back to the 200 DMA, that's a 1-to-4 risk reward ratio as of right now, where it stands. And
But
so
if a deal gets done, isn't that going to be positive for the Mex?
you would think, but we've also been, we've also seen buy the rumor, sell the news type of moves in the market too. Maybe the initial response might be a knee jerk lower, but well, I guess we'll have to see. Maybe it is more of the wait and see and see how it develops. Kman, you have any thoughts here on the peso?
No, no, not. No. It seems the market is a bit reluctant to take it anywhere.
Yeah.
But yeah, I mean, with all the positive risk, it's not coming down. That's the only thing we can say, right? Yeah, but for the rest, no, I don't see much. Maybe it's gonna move, after the meeting Trump Xi as well, because there's still a lot of Chinese stuff transiting through Mexico,
Yeah.
or being transformed in Mexico, and I don't know, a good deal may be good for mix or bad for mix. I really don't know at this point.
Yeah, I mean, Mexico has taken a lot of business away from China, and I mean, I remember years ago, about 3 or 4 years ago, I played golf with a gentleman who'd, moved his whole, 300 person, manufacturing facility from China to Mexico. He spent like a couple years doing it. This is a few years ago, but I think that's more common than you think. As labor costs in China have gone up and Mexico has stayed relatively, inexpensive. And so moving production closer to the US has been a priority for a lot of companies in recent years. So I wonder, I think you make a great point. Maybe what happens with China might have an effect on Mexico as well. So should be interesting, especially with a lot of the car and the electric vehicle car manufacturing that goes on in Mexico as well. So that's another wrench in the whole manufacturing puzzle that we're trying to figure out. But we have a couple of minutes. I don't think there's any data coming out
No,
today.
just while you're talking about data,
Yeah.
ADP have just released, and they're going to do this weekly now, apparently, an estimate, national jobs number estimate. So they've just done the 4 weeks to the weekend in the 11th of October, showing a gain of 14,250 jobs. It's obviously ADP, the main number we're going to get next week. And with the absence of the NFP report, the market's going to be looking at all this type of data now. So that's going to be
Yeah.
coming weekly.
Look at them. They're trying to take the job over from the BLS and giving us some more clarity. That's good. I mean, we not getting the weekly unemployment claims. That was our most real-time labor data that we got every week that we haven't had for, obviously many weeks now. So it's going to be interesting. And Dale, I don't know if you've read anything, but I don't see any government reopening on the horizon at this stage. Or is there anything that you see that you're reading?
No, just two parties dug in, and neither of them seem real interested in doing it. So
Yeah.
It's until the voices grow louder, and like next week they will, because people are going to go hungry that need those SNAP benefits to eat. A lot of people live off those. They used to call them food stamps.
Yeah.
A lot of people need them.
Sure.
So there's going to be a lot more noise. I wanted to ask before I bring Ben on, and could you please promote
Yep.
him,
I'll take
Blake,
care of
because
him.
I'm the
Yep.
host.
Got it.
Have you guys thought about, what's going on with this massive buildup around Venezuela and whether when something happens there, it's going to have any market impact? You don't hear it, it's not coming into the forefront, but it sure looks like it's inevitable. I mean, we're sending carrier groups there.
I don't have any.
Anyone?
Yeah, I don't
I
have any
can't figure it
opinion there.
out. Can you
Yeah.
guys? I guess it only becomes complicated if Venezuela has allies too, and China, right? So uh, that'll become complicated if it interferes with some of its allies' interests, which of course a lot of it is oil. So anyway, just another weird thing out there, hanging out there.
Yeah. Well, stocks remain at
Yeah,
all-time highs and ripping
yeah,
too.
yeah,
Yeah.
yeah. That's what I mean. It's
Yeah,
unbelievable.
Grega popped in and he's actually here. Oh, he already stepped out. I didn't realize he was here until he just left. Um, so anyway, we'll I'll nail down Grega for what other day he's going to come in this week. So anyway, Ben's here, and
Okay.
I don't want to take away time from having Ben because he always brings a great presentation. So Ryan came in. Thank you guys for getting us up to speed. I know this is the weird week where we have time change, knocks a lot of people off their schedules. Our viewership typically is about 25% lower all week long as no one's adjusted to the time zone. I mean, I don't even get a chance to listen to the full flow show. I just get to listen to the last, 20 minutes or so. So anyway, thank you guys for getting us up to speed as quickly as possible, and I'm excited for next week to get us all back on the same page from a time change perspective. So,
Well, thanks, Blake, and thank you, Kman, and Ryan. Happy birthday! I really
yes.
hope we all hope it's a great year for you, and not just with money. There's more things than money that everything goes your way, and you and your family have a great year together.
Amen. Thank you, Dale.
All right, brother. All right, Ben, how are you, my friend?
Doing great, Dale. How are you?
Good to have you here. I always enjoy finding out what you're going to have on your PowerPoint and where you think we're at. It seems like there never will be an end game the way the markets are acting. So, you know, why don't you tell us what you're thinking now going into the last quarter of this and, the epoch cycle maturing along with Hopi prophecies.
Yeah,
You
I mean
know,
it's very interesting, Dale, to watch this whole thing, play out in real time.
yeah,
The As you're saying, it appears, oh, there's never going to be an end because there's this, flood of liquidity always ready to come in. But we know, I mean, from experience that there are ends to these things and then something new will start. And so that's the key thing with cycles. It's not like the end of the world, it's just the end of this phase of the world and then we're moving into the next phase. So that's if people can look at cycles that way, it becomes a little less scary, a little less sort
right.
of apocalyptic. It's more like, okay, yes, we're going to have changes and then we're going to have a new thing. And just like it has in the history of the world. So today we're going to review the cycles. We're going to review the epic cycle. Where are we there? What can we expect? The war cycle, which your lead in talking about Venezuela, I think is a perfect manifestation of that. The real estate cycle that's beginning to bite. and the credit cycle. And the credit cycle is super important. So we're going
Yeah.
to talk about that because that's generally the catalyst for the
Yeah.
big changes that happen. I'm
Yeah.
going to also show you some very interesting on the S&P Gann price and time analysis, which gives us a target and a time window, which is really interesting. We'll have fun with an analog. I'm going to present an analog. I mean, analogs, as you know, can be fatal to your financial health if you follow them blindly, but they can also give us a kind of potential roadmap or speculative path to look at that we may be following. So we're going to go over with one of those, and then we'll highlight some of the markets I think that give us opportunities to take advantage of these cycles that we're
Yeah.
experiencing.
It looks like all the grains have turned the corner.
Absolutely. Um,
Uh,
you
I
know,
know you
they've
watch them.
Yep. They have been we've been waiting for them to sort of hit these signals and this week they're starting to fire off where we're breaking out of these channels and these
Yeah.
bases. And in commodities, that's what you do. You look for these big bases because they can base for years. And then when they go, they really, really go. And it's fun to be in when they go.
Okay.
All right, the epic cycle. We've talked about this multiple times over the last few years. I call it the real great reset. This is the end of one epoch, which is a 400-year cycle, and we're beginning and transitioning into a new one. So, what are the things that I'm looking for, and the things that are more probable to happen now that we are in this phase where we are? I think next year there's a really high probability of some sort of monetary reset. Now, does that mean it's going to be like backed by Bitcoin or currency backed by gold or a new fiat or a new hegemon? China's currency is going to be. I have no idea. I just know that Bretton Woods, which was done by Nixon in 1971, ended Bretton Woods then was when he took us off the gold standard. In other words, dollars before that were convertible into physical gold. After 1971, they were no longer able to do that. So it's 55, next year is 55 years from the time when Bretton Woods was ended by Nixon. 55 is a Fibonacci number. Time series a lot of times will progress in Fibonacci numbers. So does that mean it's guaranteed to happen next year? Absolutely not. It just means there's a much higher probability that we could see some sort of monetary reset.
Well, the ECB, Ben, is planning to launch their CBDC in January.
Oh, there you go. I mean, those are the kinds of things that you can expect. I don't think that's the big one. It may be, sort of the opening act.
Yeah.
It may be to me, it feels like it's going to be something with the dollar, and the fourth point here is because of this Nixon-Trump connection. I think on previous shows I've gone over how similar Nixon and Trump are in terms of the things that they stress and the policies as well as their experiences as politicians. So the fact that Nixon did this 55 years ago and now Trump is in power, and we have this higher probability of this sort of thing happening. I kind of think Trump's going to do something, whether it's backing the dollar by U.S. natural resources of either gold or oil or land or some sort of because he and Besson keep talking about our balance sheet is incredible if you look at the asset side, right? We have all these assets that we're not using. So I wouldn't be surprised if something like that happened. So
Okay.
as far as what to expect out of the epic cycle, I think that's the big thing for next year is some sort of monetary reset.
Okay.
The war cycle, you mentioned it, saber rattling in the Caribbean. There's again elevated probability of kinetic action next year involving the U.S. And this is a really interesting cycle. The USA has been involved in major conflicts roughly every 80 to 90 years since its founding. The first one obviously was the Revolutionary War. That's how the country was formed. The next one was the Civil War. The next one after that was World War II. And now we're due for the next one. What's it going to be? A lot of people thought it was going to be And it still could be, something involving Ukraine and Russia. That's obviously a flashpoint. Others were saying it's the Middle East. Again, not crazy to think something could start there. I don't think many people would have thought the Caribbean or South America
No.
would be the place where it could start. And that's now it's on the table. It's a possibility.
Yeah.
Regardless of where or how, again, probabilities favor there's going to be some sort of conflict, like global type conflict involving the US starting next year. So we're gonna see how that plays out and where it plays out.
Yeah. Armstrong's war cycle peaks next year.
Oh, is that right?
Yeah.
Yeah, that's good company to be in. He's pretty good with
Yeah.
his cycle stuff.
He's
The real
all he
estate
does
cycle.
is eat pie. I mean,
That's right.
what's the big deal about pie? I have apple pie every once in a while too,
I
so
love pie, so I'm on board with pie. Uh,
yeah,
the real estate cycle is one that I know you've had. I think Melody writes her name on, and
yeah, yeah,
she's been talking about it. But there's so many. It's so many people are kind of brushing it off, saying, "Oh, it's not going to happen because people have low rates locked in, so there's not going to
right.
be a lot of sellers." It is if you go back in history and look, approximately every 20 years, we have this sort of real estate bust cycle. So and this year, 2025 started it. So we are in the middle of it. It's beginning to express itself through delinquencies and foreclosures. And some of the measures that were taken during COVID are either wearing off or they've expired. And so now there's going to be more stress in those markets. And the thing I look at is, okay, let's say we don't have a great financial crisis type of fall in property values. But what if they just stop going up? Or what if they drop by 10 or 15%?
There you have.
It's huge, right? Because housing is a large component of GDP in
There's
terms of
leverage.
producing houses, and you got leverage, and it's a large component of people's net worth.
Yeah.
So to think that's not going to be an effect, I think is doing yourself a disservice. So the real estate cycle's there. So one of the things I want you and everybody to understand is you can see there's major cycles all converging into the same time frame. That's what makes me feel like this is going to be a really, really volatile, and the amplitude on the cycle is going to be huge. Now let's talk about the credit cycle because this is the one that recently got
Yeah.
my attention.
Look, can we talk about something real esoteric? I want to know if you're paying attention to it.
Go ahead.
There are Hopi prophecies about these Kachinas,
Mhm.
giving signals, blue and red being the colors. Are you paying any attention to those strange bodies in space that everyone's talking about? Atlas something?
I saw that one. Yeah, they said it was so large and moving in such a way that it wasn't like
A
natural
comet.
movement, right? It couldn't be a comet or something natural. It was something like they never had seen before. I read about
Yeah.
that. It
Anything astronomic that happened at the end of the last epic cycle?
I
Something
don't
like
think
this?
I didn't research that, but it might not be a bad project for me to undertake
Yeah.
because it's a phenomenon that's happening now, and the interest in UAVs and UFOs now, all that is sort of coming up at this time frame, and I wonder if that's a feature of
So Loom says it's a comet. They show it doesn't, the tail is going in the opposite direction. So you're sure, okay, I'll take your word for it.
okay.
It's only a comet, but the ancients used to look at comets as harbingers of not great things. Uh,
Absolutely, they bring change. Yep,
yeah.
big
Oh,
change.
all right. Enough of this guy. Good
All right,
thing
so
Steve Mulvey isn't here.
this is
He's
an important one. We gotta have our finger on the pulse of the credit cycle because all financial crises start with credit events. And it's almost always a problem with the collateral, right? The
or
lending,
none.
if there is no collateral, right, that's a problem.
Hmm.
The key thing here is I've been thinking it was going to be sovereign debt, And now I've added in private credit. I remember talking to a buddy of mine's a corporate lawyer, big firm here in DC, and I was talking to him like a year or two ago, and he said, "Oh, private credit's now the place where all the money's going. Everybody's doing it. It's a pretty amazing thing. People aren't using banks anymore. It's all private credit." Well, I think the ice is starting to crack, both on the sovereign debt side and the private credit side. How's the ice cracking with sovereign debt? Our debt, the U.S. government debt now exceeds $38 trillion. That's cracking. Sri Lanka, Suriname, and Zambia have already defaulted. France and the UK are under scrutiny now for how sustainable is their spending and is their budgets because of the amount of debt they had. Now, the big one here is First Brands was the first company
Yeah.
to sort of go belly up in this private credit realm where there was out and out fraud. The collateral didn't exist. It was pledged multiple times. I mean, major fraud, and not a small fraud. This is a multi-billion-dollar fraud. And what I equated it to is I said, okay, what was the first shoe to drop in the great financial crisis? It was New Century Financial. It was this smallish, I guess, in the big picture, mortgage company, but it went belly up because the mortgages they made were proved to be fraudulent. Like the valuations weren't correct, they had excess leverage, the borrowers weren't credit worthy. It was basically the first domino to fall that started the whole great financial crisis. When I looked cycle wise, the First Brands fraud first came up like August, September of this year. When I looked at the timing and the cycle work that I do, it's the equivalent. September 2025 is the equivalent of February 2007 when New Century Financial went bankrupt. So the thing that made me sort of pop up and say, okay, I need to go down this rabbit hole. I need to research this is one kicked off the great financial crisis. Is this kicking off this particular crisis in terms of where the credit event's going to be? And now we've seen there's a couple more. Tricolor, I think, is the next one that went bankrupt because of fraud in this area. Are the lights coming on and the cockroach is going to be seen? I think that's where we are right now, and we're at that moment. Again, this doesn't mean the market's going to crash, and we're going to talk about the timing here next.
Okay.
Independent of cycle work, I try and look at geometry and Gann work to say, where can we identify where likely periods of change are going to occur? So I went and I looked at the S&P where we are now, and I said, are there any major timing points coming up on a weekly or monthly basis? Well, there are. The week of April 11th, 2026 is 315 weeks from the 2020 COVID lows. This is a derivative of the 90. I'll show you on the chart, where the square is. On a monthly basis in January, it's 202 months from the great financial crisis lows. Now notice here, Dale, because this is important. I'm not anchoring it at the same spot because you're going to get the same results if you anchor at the same spot. So we've anchored at the COVID lows, which kicked off this last leg, and then the great financial lows, crisis lows in 2009, which was the bottom, right? Before this
Right.
whole wave happened. And we're getting a window of January to April, sort of first quarter of 2026. So now let's look at what price relationships we have. Because you look at time and you look at price with Gann and you try and find the confluence of price and time because that's called a square and that's where changes occur. On a weekly basis, we will be 315 degrees in price up from the COVID lows at 72.29 on the ES. On the monthly basis, we'll be 202 degrees up in price from the great financial crisis lows at 71.71. So now we have a time window and we have a price window here. Basically a 60 point price window from roughly 71.70 to 72.30 is the price range. Now let's look on the
Do,
chart so you can visually see this.
do this March.
It is
Next March.
in the window of January to April of next year.
Okay.
Coming up. So here, and again, this is not manufactured. I didn't like curve fit this or anything. I just said when you look at the square, so this is the weekly chart, right? This is the ES weekly. And I said, okay, these vertical lines, the thick ones are the full squares, the dashed ones are the half squares. I said, well, where's the next timing since we broke out here above, 6,500? Well, it's this dashed line here, right? And I said, okay, now let's go over to price. Where's the next one? Well, it's the dash line here. They happen to be the same exact number, right? We were talking about the square. This is a square, right? You can see it forms a square. So if we get to 72.29, that's second week of April, we will hit a perfect square and price and time will square out.
Yeah.
So to me, that's a reasonable target and a reasonable timing window for this next leg that we're going into. That's the weekly basis. Now let's do the same thing on the monthly. Okay, where's the next timing window? Right there. That's January of 2026. Where's the next price? 71.71. Again, a perfect square. Now we could have been anywhere on these charts, but both charts set up for perfect squares in this 71.70 to 72.30 range in that January to April timeframe of next year. So to me, gives us a good window to look at and a decent runway. We've got what, like 300 points in the S&P potentially from here to trade. And you could see because we're above these squares, like everyone says, oh, weren't you bearish down here or weren't you bullish here? Every time we get to one of these price squares, we have a decision to make, right? And so here I was cautious because we hadn't cleared the square, because anytime you come up against these squares, you could get stuck under it, right? But once you clear it, then you look to move to the next square. And that's where you say, all right, when we get up here, if we do get up here in that time window, we're going to say, all right, do we stay below it? Do we get stuck? Or can we push through, sit on top, and then we go again? And that's what we've repeatedly seen here. So every time we get to one of these places, it becomes a decision point. And this is what I see as the next potential decision point. And as long as we're, in this case, on a monthly basis, as long as we're above, the 64.50 area, we're going to push higher, because it's bullish. All
Would
right.
you call this a little bit of a change of heart over the last 6 months that you were looking for highs more than having a bullish outlook?
Absolutely. And you have to, and Dale, if you're not flexible, you're dead in the markets.
Yeah,
Right. And
I'm
so,
just seeing a lot of capitulation of the bears now.
yeah. And
And I could understand it. The price action is,
what I've
good.
tried to do, Dale, is shorten up the time frame I'm trading in terms of the ES, right?
Mhm.
Instead of looking for the huge big picture, I'm shortening up the time frame and dealing with the technicals and the geometry that we're given, which
Right.
is if we break out, pull back, sit on top of the previous high, that's bullish, right? And you're
Yeah.
going to go
Yeah.
again. And
Yeah.
that's what we've continued to do. And I think we're in the terminal phase of it, but you can make good money, as long as you're trading short term, uh, you
Oh,
know,
yeah. I
following the
mean,
bulls.
those targets are a bit conservative compared to a lot of the melt-up guys.
Yeah, I don't know if we're going to melt up. I just know that from a geometry standpoint, those are valid targets in valid time frames.
Okay.
Uh,
And Martin Weiss is also talking this spring. I'm getting a lot of vibes about the spring of 26.
It's interesting.
Even Mark Chaikin is talking about that too. Do you remember him?
Yeah, yeah, he was the money flow guy, right?
Yeah, yeah. So he's yeah. Then we do have cheerleaders in it here in Face. Um Saloom is one of our cheerleaders. You
Right.
could see he likes those little emojis. So anyway, okay, go ahead, bro.
Let's look at an analog from the great financial crisis. Cyclically, we are very much aligned with that period, in addition to periods in the 70s. So there is a there is a connection to that, and events, as you know, Dale, because you have looked at cycles and you studied them and you follow some lunar ones, which are interesting to me too. Events often echo the patterns from previous cycles. And based on how the GFC played out in that 2007 to 2009 period, and remember, we have a marker, a very early marker, that First Brands and New Century Financial are connected cyclically, right? They're
Right.
both potentially both going to kick off crisis in markets. We know the first one did. Now it's the second one. We're going to say, okay, are we following this pattern? Is it going to happen? If this plays out, we're looking at a high in Q1, that January to
Right.
early April timeframe.
Right.
August 2026 is an important part because that's when we can expect systemic issues from private credit or sovereign debt to surface, where there's sort of going to be the recognition that this is not contained, this is not sort of a one-off or just one little sector, but it's spreading and it's affecting the whole system. Late 2026, early 2027, that's when we would see the sort of the most intense portion of the financial crisis, the meltdown, if you will. And then we would be looking at a bottom somewhere in Q3 2027. And I just drew it out like on this chart so you could see sort of how it would look, something like that, where we go up into that 72, 73, 7100 area, make a high, you have your first pullback, then you get the lower high, and then the panic starts when you take out that low, right? That's when you get the big move down. Again, it's a
Yeah.
speculative path. It's based on the timing that happened in the great financial crisis and the connections that are there between uh, the current period and that period. So let's see how it plays out. Obviously, technicals are going to matter. So you gotta use your technicals. If we come back, if we pull back and then make a higher high here, it's over, right? You can't keep fighting that battle.
Okay.
So that's
Interesting
that
look.
that's a GFC analog. Let's talk about some of the epic cycle plays. It has been a great year. If you followed the epic cycle and the plays that we were discussing that we were in, we had gold, we had silver, we had Bitcoin. All three of them have had a tremendous year. All three of them, I believe, have made a high. I don't think it's the high for the cycle, but I do think we've made a high. I'm personally, I've taken some profits on gold and silver and the little bit of Bitcoin that I had. But let's look at the charts and see, what this has done this year. I mean, it has just been phenomenal, as you know. This is for gold. I think we did make a good high. Maybe if you're looking at waves, this was a big wave three. We get some sort of wave four pullback and we go again. And the reason I say that is if you look at the low here in 2018, if you go from there or you go from the low the low in 16, there's still more to run in the cycle. So this I think caught this wave, the 90 here, 90 months, but the 144 is what gold does low to high, and that would take us out to the latter part of 2027. So cycle wise, I do think we have higher highs coming in gold. Is it going to be this parabolic that we saw? I doubt it, but I do think we're going to get, higher price targets here in gold after we get this correction taken care of. And that's gold.
Mm.
Silver squared out here. So it's not surprising that we're seeing profit taking. You're a big guy on divergences. There's divergences here with this highs in terms of relative strength and momentum. So there's going to be a pullback in silver, but again, I do believe we're going to see higher highs once this pullback's done. Silver likes to do 90 months low to high. We did that back here in 2011. If we take the low here at the COVID lows, it puts us again into 2027.
You have any
Yeah.
levels for buying silver on a pullback?
I think if we get into this, let me go back to silver. Hold on. Oh, why did that happen? The slideshow messed up for some reason. Let me restart it. Are you still there?
I'm here.
Okay, good. Let's go through. All right, back to silver. All right, so here's silver. I think in this 37, 38 area would be a reasonable spot
That'd be a great spot. Yeah.
because basically we're failing here at this 49 level, like not clearing that. So the next level would be back at this 38.
Okay. Thank you,
So if we
Ben.
pull back to 38, it'd be a nice spot. And then Bitcoin. And Bitcoin's been struggling since we made that high. There's your old 3 drives, Dale, on a monthly basis. So I wouldn't be surprised to see a pullback. We're defending 112 really well, but if we got a pullback to like 93, or if we really get a pullback and get back to 75, I think that would be a great buy. But
Good.
93 is going to be the next level, this half square.
Okay. All right.
Here's some opportunities, I think, again, based on the cycles we were looking at. We've been talking about selling the home builders, and we put in a lower high. So we had this high, nice pullback, retrace, reversal. It's in a good spot to sell. So
Okay.
I'm negative on the builders based on the real estate cycle. Positive on aerospace and defense stocks. They've worked out very well. We were talking about them down here around this 209, 210 area. We're sitting above this half square. So next move is going to be up to 282. So those continue to do well. So we're trying to play the war cycle that way.
Yeah.
Here's commodity. You love the grains. I think the grains look really good on a weekly basis. We did this ABCD down into a low with a false break. Always a great signature for a low. Got to push up, pull back, and now we're going again. So 412 was a key level on a weekly basis, and we've cleared it. So now we're heading to 517. But corn looks good. Beans is another one that looks good. We've been here. Here's your classic commodities like channeling, right, for a while.
Yeah.
And now we're breaking out of this channel. So we should
Right.
be heading up to like 1280 in beans next. They look good.
Yeah.
Wheat, which was the laggard, is coming along. I didn't put it up, but it's coming along. It'll get pulled up by the others. Here's one that I think is really, really interesting. It's not there yet. This one and Nat Gas I'm going to show. They're not there yet, but they're getting close. The thing I'm showing here, the geometry of these circles, when you get to the edge of the circles, you get acceleration, and you could see that here on the way up. But then once you break out of the circle, you can get acceleration in the opposite direction. Well, look at the direction we've been going here. We've been getting acceleration to the downside. And now because time, as much as price is ending, we're moving outside of the influence of this circle. So once we start clearing resistance on shorter time frames, I'm looking to get long crude oil because I think there's a play here and a potentially good one it also fits with the war cycle. If we see war,
Iran 2.0.
commodities do well, right? And oil will be
Iran 2.0.
could be could be.
Yeah.
Nat gas, also another one that looks to be bottoming. It's taken its sweet time. I mean, basically since 23, we've been between 370 and that down here sub two, like around 198, I think it is. So
Yeah.
once we break out this gap up was that was a change over in the contract. But as long as we can hold 371 on a pullback on the new contract, I mean, this thing looks bullish.
Yeah.
So I'm interested in watching the Widowmaker, see about getting involved there. And then lastly, how can you play this private credit bust? This is Blue Owl Capital. We had a nice run up into a high early this year that squared out. Very nice square here. Once we had this first downdraft, now I'm looking if we can do an ABCD up or some sort of rally into here that fails, that gives us another lower high. I'm going to short this thing because I do
Okay.
think private credit is going to be where major issues are this cycle. I mean, other companies you could look at, there's Apollo, there's Blackstone, there's KKR. You could, if you want to play it through the banks, the banks with large exposure, Wells Fargo, Bank of America, PNC, Citigroup. I mean, there's going to be a potential contagion here. So I think finding good things to play that and express that will pan out nicely over the next year and a half, 2 years. And that's it for now.
Beautiful. Best place for people to. There's Ben's YouTube channel. Check it
Yep.
out.
Yeah, we put a video out every week just on the basic markets we follow. Just good information with the levels and things to watch. And then there's my X account.
Follow him. Okay, Ben. Well, great catching up with you. Let
Ab-
me know. Let me know on that astronomical question.
Absolutely.
That's
I'm gonna
kind
I'm
of a
gonna take a
weird
look at that.
thing. Weird thing. I know there's a lot of weird videos on YouTube, but it's all over YouTube.
The timing makes it interesting to me, right? The time that it's occurring, it makes it interesting.
The Great Deception,
There you go.
right?
Yeah.
So thank you, brother. Everyone, Ben Maldonado. Ben every quarter brings to the table things for us to digest and act on. So once again, everyone thank Ben. You can thank him by following him and checking out his work. And that's a wrap, everyone. Have a great day trading. Remember, don't just count your epic cycles or your Kondratiev cycles. Count your blessings and have a great day. See everyone tomorrow. Thanks again, Ben.
No problem, Dale. Appreciate it. Take care, guys.
All right, buddy. See everyone tomorrow. Adios, Golda. Shalom. See you again.